So get this, guys. The biggest tech stocks have lost over $3 trillion over the last year. To put things into perspective, the money that these companies like Amazon and Facebook, Meta, the money that they lost is 13% of how much the U.S. economy is worth as a whole. The whole of the United States, guys. What are these billionaire entrepreneurs and investors doing? And more importantly, what is it going to do and what does it have to do with us? Well, experts say that if you want to know if a recession is coming, you should watch these companies' earnings reports closely. The latest one from Amazon that they just delivered is shocking, to say the least. They missed all kinds of expectations and their stock dropped 13% because of it. And that's just the latest amongst these tech companies that are causing the stock market to crash and burn. But seriously, pretty soon heads are going to roll, meaning layoffs for a lot of workers and quite possibly even bankruptcy for many Americans. Now, does this boost our chances of any government assistance as a result? Any bailouts coming for these companies, but most importantly for the people? What do you guys think? Should President Biden have authorized more relief aid in the form of stimulus checks, perhaps, maybe? It was around this same time in 2020 when former President Donald Trump put his foot down and said that he's not going to sign anything until they put another stimulus check out for Americans. Now, fast forward to today, midterm races are getting too close to call. Biden may take a page out of Trump's playbook and get a stimulus check in before the holidays roll in. Do you guys still believe in Biden at this point? And if he were to produce checks, would you go spend them or would you invest them? Would you start building business with them or would you pay off bills? Just kind of curious. And are you going to wait for that check to hit your bank account first, or are you going to go out there and try to make the money yourself? Which I've posted a recent poll on the community post tab of this channel. You may want to go check it out. I read a disturbing article headline that said that millennials and Gen Zers are against capitalism, which basically means that they would literally be only interested in ducking their heads down and waiting for the government to take care of them and feed them and put a roof over their heads and basically baby them in their lives. No motivation on their own to create for themselves, to build, to pursue private ownership and profit. A little shocking, a little disturbing to me. But growing up in these times, I can see how some may look at it that way and say that may be a better option for the fact that everything is so expensive and life in general is just harder to live. And to think a first-time home buyer is probably going to need to make over $150,000, have a perfect credit score, and be ready to pay $3,000 to $4,000 a month in a mortgage payment. That's not easy to do. So I'm not saying that I want to give up. I'm not saying that I want the government to just baby me, but I am kind of curious about what you guys think. Is capitalism still the way to go? Or is there a strong push from Gen Zers and millennials for a socialist society, which could have a huge impact on the Great Reset, which we could see this younger generation coming in and trying to force us into things that we don't want just because they're too weak. They're not strong enough. They lack the desire and determination and motivation to push through. But first, let's take a look at what's happening with Amazon. Amazon stock dropped a whopping 13% after they released their fourth quarter forecast and missed their revenue estimates. Basically, that's a lot of cash flow and money opportunities that they've missed, and the stock market is not happy about it. And it's not just Amazon that this is happening to. The rest of big tech is basically shaking their heads right now and emptying their pockets for any residual or passive income that they can come up with to appease the Wall Street gods. You know what I'm saying, right? I mean, people used to look to Amazon and these other tech companies for how to make money and how to invest. They basically just put out all their eggs in one basket, and now tech is suffering, and people are too. We're seeing it left and right. We're seeing it with tech layoffs. We're seeing it with companies cutting back. We're seeing it with bankruptcies and defaults and companies going out of business. We're seeing it with basically last resort panic moves by some of these companies. They're trying to save their butts while trying to drive up revenues and form some form of profit after even they are experiencing the post-pandemic recovery hangover that we all are as a result of too much money poured into the economy, too much money poured into increasing wages, companies growing too fast, too quickly, and now it's coming back to bite them in the butt. And experts say that if you want to really predict whether a recession is coming, just look at the markets and these companies' earnings reports. So like Amazon and the rest of the big tech are really struggling to make money online. And with all the market headwinds that they've been facing lately, like raging inflation and rising interest rates, Amazon's retail business has slowed as well, since people are going back to physical stores for their shopping in some degree. Now, it's the second time this year we've seen a double-digit sell-off on Amazon. And some shoppers are going back into stores because they do feel comfortable with the current progression of the pandemic ultimately being over, and they are more likely to visit stores. But online sales are a bit of a struggle just because of money, and folks are choosing where they're going to put the money that they have, if they have any money to put. Some people are still earning. Some people are still earning really well. Some people are earning huge income. Some people are making lots of money. Some people are not. Some people are borderline on the edge and are in a transitionary period. Some people are deciding not to spend their money on commodities and consumer goods and are focusing more on travel, while others are stashing cash and investing in precious metals like gold and silver and other investment vehicles to hedge against inflation, like the fractional asset class that I was telling you guys about. So it's a little bit of a mixed bag. But at the end of the day, the retailers, the online sellers, they are the ones feeling the pain. In April, Amazon's weak forecast for the second quarter led to a 14% drop in the stock. So now heads are rolling, and Amazon's doing everything to cut costs across a lot of their divisions. Remember the warehouses that I told you that they canceled construction on, and the layoffs, and some of the warehouses that they've closed, these distribution center, these hubs? They've already shed warehouse space, halted some experimental projects, shuttered its telehealth service, and froze hiring for corporate roles in its retail businesses. Translation: a lot of people are getting laid off. They even said it here. The company is now taking steps to tighten our belt, including pausing hiring in certain businesses and winding down products and services where we believe our resources are better spent elsewhere. And like I said earlier, Amazon is rounding out a disappointing earnings week from big tech. Alphabet and Facebook parent Meta both posted earnings that fell short of expectations as they're having trouble in the digital ad market. Microsoft wasn't immune either. Their revenue from their cloud service also took a hit, not to mention their quarterly report wasn't too good either. And Apple beat on earnings and revenue, but came up short in their iPhone business and the services unit. Yep, investors weren't impressed. Their stock traded lower after the news came out. The new iPhone 14 just wasn't what people want, and the lower price didn't help them by meeting their earnings. But it's at a time where consumers, shoppers, Americans, folks that your typical Apple fanboy fan base is tight with their money, and they have to decide, do I really need to upgrade my phone again to the same phone? Do I really need to upgrade my watch again to the same watch? So here's a good question for you guys. Of the FANG, mega cap tech stocks, that's FAANG, Facebook, Amazon, Apple, Netflix, and Google, Alphabet, which one has lost the most market value over the past year? Well, one thing's for sure. Over just 1 year, the 7 biggest tech companies lost $3 trillion in the stock market. So that's the equivalent of 13% of the U.S. economy lost in just 1 year. Can you imagine how much money could have been shelled out to Americans in need? Let's do the math. With the latest population count of 332 million, and assuming we could provide $2,000 per person, the money these big tech companies gave up would have been able to fund 4 rounds of payments of $2,000 apiece to 332 million people, and have enough money left over for another round of $1,000 stimulus check for every man, woman, and child in the United States. Now, that's some crazy cash flow we're talking about. That's a lot of money. So yeah, needless to say, a staggering $3 trillion in combined market cap in these tech companies has been lost in 1 year. Most of the losses have occurred across 6 of these stocks, but it's hard to leave Apple off the list. So how are they planning to bounce back? Well, Facebook, Meta, for one, wants to lose even more money with their plans for the metaverse. On a call with analysts, Zuckerberg and other Meta executives doubled down on their commitment to the company's Reality Labs unit, which is responsible for developing the virtual reality and related augmented reality technology that they're using for metaverse. They said, "We do anticipate that Reality Labs' operating losses in 2023 will grow significantly year over year. Beyond 2023, we expect to pace Reality Labs investments such that we can achieve our goal of growing overall company operating income in the long run." It's hard to believe that while regular working class Americans are struggling to keep up with their credit card bills and housing costs, you have Zuckerberg and these Meta executives voluntarily throwing money away into this metaverse experiment. Definitely puts things into perspective, right? Even Zuckerberg doesn't really know where they're going with this. He said that, "I just think that there's a difference between something being experimental and not knowing how good it's going to end up being." Yeah, if I didn't know any better, I'd say that quote came from my drunk uncle. Here's another one. I can't tell you right now how big they're going to scale to be. Each improvement is kind of going in the right direction. So, yeah, a lot of maybes there from the CEO of the largest social media company in the world, if you ask me. But still, Zuckerberg seems to believe in this product, saying long-term investments into the metaverse are going to provide greater returns over time. And I think we're going to resolve each of these things over different periods of time. And I appreciate the patience, and I think that those who are patient and invest with us will end up being rewarded. We'll see. But another reason they're downplaying here is that if they're successful, the metaverse would ensure that their company owns a platform in the future that won't be impacted too much by the decisions of its rivals like Apple. Zuckerberg said that a lot of this is just, you can build new and innovative things by when you control more of the stack yourself. Now, go ahead and drop a like for this video if you just don't get what these tech billionaires are talking about and what they're doing, all the while everybody else is having a hard time. Now, here's a big warning for the tech sector. The chip ban. The U.S. declared on China. That isn't sitting too well with China. And experts say that a Chinese retaliation could be disastrous for U.S. companies. So what am I talking about? Well, you see, China consumes more than 75% of the semiconductors globally, but produces only about 15%. So now imagine if they just downright just say no to any tech coming from the US. If you think tech stocks were doing bad now, then this would send them on a nosedive for sure. I think right now what China is trying to assess is if the intent from the US government is to make sure that China cannot even buy or produce or even maintain. And this actually could impact many, many industries. We're not just talking about computer or smartphone and EV. There's all sorts of industries actually really that need this chipset to continue to run. Now, I don't think there's a conclusion yet, but what I'm worried about is that if China really wants to be as aggressive as the US and retaliate, there could be a lot of impact for all the other companies in the US. And I think this is beyond just impact in terms of revenue for Intel or Qualcomm or Nvidia, or of course the need to watch out for TSMC. They're from Taiwan. But if they retaliate in other industries, this is going to be disastrous. So yeah, for the past few years, Chinese President Xi Jinping has been on a campaign to move China towards independence from buying from Nvidia, Intel, or Qualcomm. All US companies for that matter. Now, experts don't think China is self-sufficient yet, but this is China we're talking about, folks. These guys move fast when their president cracks that whip. So if that happens and China stops buying from the US, well, the report said that a complete ban could lead to upwards of 40% drop in revenue for some of these big names in the US. Now, how are you assessing that impact right now? Now, tech companies are already prepping for the worst, before shit hits the fan. They're already accounting for what they think are going to be components of their portfolio and their impact that it might have on their revenue. And of course, we've seen the early warnings coming out from these companies. There's certainly a chance that this could have a much bigger waterfall effect, so these companies have already looked at the situation. They're assessing it. And in this sort of tough macro and tough economic period, they're starting to put those warnings out about what it could really mean. I mean, this could lead to a serious arms race for the next generation of technology in areas like supercomputing, high performance computers, and artificial intelligence. Definitely something I'm going to be keeping an eye on. But let me know if you're curious about any of the topics that I've covered today. Now, we can definitely talk about it more in future videos. Just drop a comment below and let me know what you guys think. These are very interesting times we're living in right now. And honestly, the writing is on the wall for what is to come. In my opinion, mass layoffs. Huge conflicts between the United States and several other international countries. And folks' income at risk. With that being said, there are ways to align yourselves with the companies and the businesses that are going to continue to pay and continue to allow you to win. The question is, do you know which ones they are? And are you doing what you need to do now to be prepared to align yourselves with them to cash in on that cash flow opportunity?